Just moments to go until the closing bell. Stocks are losing ground, but they're still up triple digits.
Yeah, how about that? Dow up 117 points. What happened? And will the rally continue? Let's take it to our Fox Business panel. Gang, we got this news this morning about Warren Buffett saying that he would prop up the bond insurers, at least a portion of it. That juiced the markets. Is it sort of as we come back down, they're kind of realizing, wait, he offered to help out the municipal bond part, which is the healthy part.
He's not going to help the insurers at all. He's willing to take the only profitable part of their businesses away and leave them with the rest. So I think it's potentially good news in the short run for some of these municipalities. But ultimately, I think they're going to have problems when the recession really hits and they're not getting as much tax revenue from property taxes. They're not getting as much sales tax revenue. I think a lot of these municipalities are going to have problems down the line, even if they have a Warren Buffett behind them.
But let's look at, Pat, some of the bond insurers. MBIA, for example, which had been one of the most stable part of the financial world. You know, these municipal bonds almost never defaulted. And then they decided, geez, everybody's putting money in real estate. Maybe we should too. So they got in. I guess they've written down about, what is it, about $1 billion so far, which is more than they've had to write down in their entire history.
Exactly.
Is that it? Is it over now for MBIA?
I don't think so. And I think that's Warren Buffett, and even coming in with this kind of offer, basically he knows that the insurers are going to be looking for capital. And so he was trying to cherry pick in there. Very clever, very good idea for him, not such a good idea for them. And I think that's what also happened in the market. They looked at the GM thing and they said, they're going to restructure some jobs, they're going to work with the unions. Well, when they started looking at the detail, maybe not so good. Yeah. Then they looked at the mortgage.
It takes a while for them to pick it up. Tracy Burns, you're out on the floor there. Was it GM? Was it the Buffett bounce? What are the traders saying?
You know what? It was lack of conviction, as we've been saying all day. Yeah, it was a Buffett bounce to start the day off, but it didn't. They knew at that point that it couldn't sustain. And so we pulled back about 100 points. We also, too, we watched the financials pull back. We watched the home builders pull back. So this was a lot of, I hate to say it, but fluff. We ran up to 200 points, pretty much for no reason. We had news from the Philly Fed, of course. That's what took us off in the beginning. But then we pulled right back down. And hopefully we'll hold here, because this is where we started after the news that Buffett was coming out to hopefully help out some of the muni bond insurers. But, look at the coal stocks. The coal stocks are getting hammered. So there's a lot of profit taking, a lot of money moving back and forth between sectors. But there's a lot more red on the screen now than there was when we started the day today. Even the transports have gone negative. So I think it was, I hate to say it wasn't real. It's that whole, bear market rally, but I think that's what we saw today. Hopefully we can hold this 100 points going into tomorrow.
Volume, Brenda, volume. I mean, you look at 1,300,000,000 shares. That's pretty low. It sounds like a lot, I know, but it's usually about 30–40% higher than that for a day.
Yeah, it is, and you have to look at stuff like that. But I'm not going to spit at a triple-digit gain, honestly, in a market like this. It was very broad-based to begin with. Yes, there's been some selling off.
We're not spitting, we're hesitating.
Oh, okay, just drizzling
so
a bit.
Graphic.
Well, I think this is a real counter-trend day, though. It's typical action. You got rallies in the stuff that's in bear markets, like U.S. stocks. The bull markets are all pulling back. Look what's happening to gold and silver today. Silver hit new almost 40-year highs yesterday. Platinum's off today. You mentioned a drop in the coal stocks, but the coal stocks have been on a tear. So all the stuff that's been going up
is down $15 an ounce.
Quentin, what's the hot name that everybody's talking about publicly traded out in Silicon Valley? Is it the First Solar or some of these other names? What's the scoop out there?
Oh, well, the solar stuff is nice, but it's going to get nuked in any kind of rally, in any kind of sell-off, because it's hopelessly overpriced. The multiples are way too high on that kind of stuff. What's doing well are the Cisco's and Microsoft's, the kind of reliable standbys that will survive any kind of downturn. They seem to be looking pretty good right now. But, okay, transports are down. Do not head for the bus station yet. Do not leave town. Things will be okay. Look, when Warren Buffett is coming out looking for clever ways to take business away for MBIA, that's great. That's capitalism dealing with a problem and looking to seek advantage. He may eventually make a whole new kind of market in bond insurance, and MBIA doesn't make it to that point. But that's good news. We are slowly clearing out the mess here. We could be a couple more months doing this.
Absolutely.
The good news is bad hedge funds are going down. The clearing out is beginning.
Yeah, I mean, let the market work. If the worst thing that happened today is people said Warren Buffett wasn't Santa Claus, he wasn't so generous, so what? He's a businessman.
Exactly.
He did the right thing. And I think that did give some confidence to Wall Street.
The
That,
stock
the
fairy
market
will
may
not
work.
save us.
And Pat, the best thing that happened today, from my perspective, was that Congress didn't do, or the White House didn't come out with a really draconian solution to the problem.
Oh, God help us when it does. Yes, you're absolutely right. The more that Congress gets involved, the more that the White House gets involved, the more we should all shake in our boots.
Well, Peter, bringing it back to the markets, I love this story that Peter was telling us in the break, because we were talking about how platinum had risen, and you made some money in a company called
Zimbabwe Platinum.
Zimbabwe Platinum. Okay,
What
tell us
Robert
what you
Mugabe.
did and how
Your
you
good
made
buddy
the money.
Mugabe,
Because
yeah.
people are always looking for ideas on how to make money.
This is an Australian company. It traded in Australia, but the mines are in Zimbabwe, which is a very, very unstable part of the world. And
So
it
risk there.
Sure, and there was a bumpy ride. I remember one day we owned that stock, and I think it was down 30 or 40% one night on nationalization rumors. And all of a sudden, it was thought that the government was going to steal the entire mine out from under us. And a lot of people got nervous and sold out, and then the stock just went to the moon. After that, they came to some kind of agreement. But that, all over the world, they mine these metals in very risky places. But look at where these metals were. Back in 2000, silver was $4 an ounce. It's $17. Gold was, $300. It's $900. Platinum was less than $500. It's almost $2,000. But look at soybeans. They were $4 or $5 a bushel. They're $13 a bushel.
Quentin,
Wheat was $3. It's over 10.
Quentin.
Peter, what's your position, Peter, on scratch lotto cards? Because that is just total gambling. Yes, you did well, but would you recommend any civilian go try that?
No, sure. Well, look, it doesn't take rocket science. You don't have to be a rocket scientist to understand that when the governments print a lot of money and create inflation, prices rise, particularly commodity prices.
Peter, we have to warn the folks out there. You don't have to be a rocket scientist to know that commodities can crash as well, and that these governments, like Zimbabwe, for example, can come in at a heartbeat and take over your investment.
That's the risk in the stock, but in the metal itself, there's a lot less risk in owning something real like gold or platinum than owning paper money. The politicians can.
Paper money.
Do you have platinum in there?
That's 1-year decline in commodity prices from about 1982 to about 2002. And because of that, we lost capacity in all these various commodities. And we're actually in the other side of that. Commodities are rising in price, and it's really back to supply-demand. I hate to put it that way. The world has started to use up the available supply, and the demand is growing. So we probably are still. Excuse me, let me finish, because I always let you finish. We're still probably in the first of 3 legs in commodity prices, and I think in that regard, Peter and I actually can agree that when we go out 5 years and 10 years from now, we're going to see prices in commodities continue to rise, and they do belong in almost everybody's portfolio, but small dollars, not huge dollars.
But Brenda, there are 2 things you can invest in: commodity stuff, gold, stuff that's in the ground,
Copper,
or
steel.
wealth. That is the idea that people can invent something that doesn't exist before. That's what all of Silicon Valley, where Quentin is built on ideas. Aren't there any stocks, because we are so good in America at coming up with those ideas and following through, and we have the freedom with which to follow through on those ideas? Won't we see breakthroughs in that area as a place to invest?
In car makers and hamburger makers, David.
There
we go.
Because
I know you
Hold on, that's to Brenda. Go ahead.
No, absolutely. I mean, in your portfolio, there's room for both. But Pat made a very important point, and that was the other side of the commodities. They were at that level because they had come down a lot, and now they're coming up, maybe even a bubble fashion.
Talked about, David, the car makers, but you'd hear from people like Frank Holmes, a big U.S. financial guy, and he talks about how China is going to need thousands and thousands of miles of roads because people want their cars. So wouldn't that then stand to reason that maybe GM is the play for the future, Quentin? I mean, you look at that situation and you say they're going to need cars, they're going to need cement, aggregate, things.
I would find out who's making the paving equipment and invest in that before I'd invest in GM. No matter what's driving on the road, they got to build the road first.
We own a company that operates all the toll roads in China. They collect a lot of money. Of course, the more cars on the road, the more they collect.
What
and of
is
course,
this
it's all in
company
renminbi.
called? What is this company called?
Road King Infrastructure.
Road King Infrastructure. You heard it here first.
No ADRs.
No
Trades in Hong
ADRs.
Kong.
All right, so you have to go to Hong Kong.
Yeah, there are, but in general, you're talking about stocks versus gold. As an asset class, stocks are expensive. Gold is a lot less riskier than stocks in general.
All right. Well, we are right here in the good old USA where the closing bell rings and the market is up triple digits. We were wondering whether or not it was going to hold on to those triple digits. Indeed, it did. And in fact, NASDAQ has ended the day in positive territory as well. So as the trading days come to a close, the